Japan appears to have the upper hand on regulating crypto. Joining me now is a senior reporter at Forbes, Nina Bambysheva, to tell us more. So I read your story, What Japan Could Teach the U.S. and the World About Regulating Crypto. And as we know it, the Japanese unit of FTX, for example, is the only one to have resumed withdrawals. How were they able to do this?
Yes, so FTX Japan is the only unit that we know of that has returned money to the majority of its customers. And a lot of it has to do with some strict rules that the Japanese regulators put in place to protect customers. And this also has to do with, a long history of digital assets in Japan. Japan was an early adopter of digital assets. Some of the largest crypto exchanges started off there, and the country saw two big crypto exchange hacks. After those incidents, the regulators adopted some of the rules that later on protected FTX's customers.
And could you go into detail about these rules?
So yeah, some of the rules include asset segregation. Customer and company assets must be held separately. Investors can't borrow more than twice their investments for leverage trade, something that is known as leverage trading. For example, some crypto exchanges support trading with 100x leverage. In Japan, you can't go as high as that. Also, exchanges must hold at least 95% of customer funds in cold wallets. These are wallets that are not connected to the internet.
So could you tell me, when it comes to those rules, what is the U.S. doing wrong when it comes to protecting customers' funds?
I think, first of all, it just has to do with different systems. U.S. regulatory system is very different from Japan. There are federal regulators, there are state regulators, and probably the main point here is that in the US, we have the CFTC, which regulates commodities, and SEC, which regulates securities, and they don't seem to agree on what crypto assets should be considered what. There is, I think, a common understanding that Bitcoin can be counted as a commodity, but as we saw with Gary Gensler's testimony recently, he's not comfortable calling Ether a commodity, and this is the second largest crypto asset by market value. So it puts all those smaller tokens even in a shakier position there. And in Japan, you have one leading regulator, the FSA, which works with industry groups there, with the government. They have a working group that deals with blockchain technologies known as Web3 working group. So that's one. And second, I think really going back to what we already talked about, that Japanese regulators learned their lessons. That might have been the hard way, but at least they have this secure base right now where customers feel protected. Although some may argue that those rules also made it difficult for entrepreneurs to launch new tokens. Some of the founders that I spoke with who started in Japan had to leave because they felt like token listing processes were taking a long time. There is a difficult tax regime there, although that is also changing right now.
Okay, so the tax regime, could you go into more detail about that? I believe, if I'm not mistaken, that's why Coinbase and Kraken decided to leave Japan.
Well, the exchanges Kraken and Coinbase cited market conditions for leaving the country. But on the corporate tax rate, so it is set around 30% on unrealized gains from crypto holdings. And this is a big rate especially for smaller startups.
And if it's not a good place for entrepreneurs, how does Japan plan on being one of the leading countries in the Web3 space?
Well, that was the case for a while, and now we see the ruling party coming out with policy proposals, and they work directly with the prime minister on changing some of those things. They already issued a few white papers where they proposed changes to the tax regime to better regulating NFTs, DAOs. So I think the overarching message is, hey, we're open for business. We are ready to make those changes to make entrepreneurs, local and foreign, feel welcome in the country.
So how integrated would you say the Japan's financial regulators, the FSA, how integrated are they with the Financial Stability Board?
Right. So they're saying that they contribute to international policy discussions at the Financial Stability Board, which is the organization that monitors and make recommendations about, global financial system worldwide. And also the ruling Liberal Democratic Party, the Web3 Working Group, they're also calling on lawmakers to drive the discussion around Web3, digital assets at the upcoming G7 summit in Hiroshima, which Japan is hosting later this month.
Mm-hmm. Okay, well, Nina, right now in the US, there is a pretty big discussion around stable coins. Could you tell me what are they discussing in Japan when it comes to stable coins?
Right. That's also top of the agenda for Japanese lawmakers. Last year, they passed a framework for regulating stablecoins, and this year, the FSA is looking at how to implement it. So the exact date, I think, hasn't been set yet, but they said that the enforcement deadline was set to early June. So it's very possible that we'll see something from them pretty soon, but it's still not clear what stablecoins exactly will be allowed, what the rules will be like for the issuers, although the FSA says they will carefully examine each project, and foreign issuers in the countries will be subject to the equivalent regulations in Japan, so the underlying assets are preserved appropriately.
Okay, because initially in Japan, it was pretty hard to get your stablecoin pushed through, but now it'll be a little bit more lenient. They'll be more lenient with the process.
Right, there will be a clear framework for doing that.
All right. Well, thank you so much for joining me today, Nina.
Thank you.